So the Fed's cut rates twice now, but there's something that completely flew under the radar. Most people thought these Fed rate cuts would have brought mortgage rates down, but they didn't. Because when the Feds cut rates, it makes it cheaper for the banks to borrow money, not necessarily you. But here's what happened that most people missed. Because this whole time, the Fed's been doing something else that's the real reason why mortgage rates have been stuck. It's called quantitative tightening, or QT. Basically, the Fed's been dumping mortgage debt and treasuries, so pulling money out of the system. This causes less demand for bonds, which causes the prices to go down, which creates higher yields and higher mortgage rates. So even with their rate cuts, they've still been flooring the brakes on what actually impacts mortgage rates. But here's the news that no one's talking about. Starting December 1st, the Fed is ending QT. They're going to stop shrinking the balance sheet and start reinvesting again. And what that means is for the first time in years, the pressure on mortgage rates is finally easing off. And what'll really bring interest rates down is what's called quantitative easing, where the Fed is basically pumping money back into the system, like they were during COVID or after the crash of '08. This is what was pushing interest rates to historic lows for so long, and what it would take to do it again. So yeah, these rate cuts didn't move your mortgage much, but this shift in the background, this might be the real start of rates actually coming down. But you have to ask yourself at the end of the day, do we really want the Fed manipulating the market again? Let me know in the comments.